Good afternoon, Coldwell Banker George Realty. We're in for a real treat today. Tracy Shaw from HTGR Funding is here to talk to us about mortgage, the rates, and anything that goes along with us. She was also very generous and brought a lunch for us. So for those of you in the area, please stop by and meet her in person and grab some lunch. So we are going to get started now, and thank you very much. Okay, Tracy will be taking the controls of her presentation.
Thank you, Michelle.
Thank you.
Good afternoon, everybody. Thank you for everyone who joined me in person today. And also thank you everyone on the Zoom. This is Tracy from HTGR Funding. We are direct lender, and today I want to share tools we can help with you and your clients so we can get more deals closed. So today's session will be divided into 5 parts. First part is who we are and getting to know you guys. Second is what we can offer. And third is how we can close more deals together. Fourth is market outlook from Fannie Mae research. And the last one is a Q&A session. So we are direct lender. We established since 2007. We have our own in-house funding department. We have a large presence in San Gabriel Valley with 2 locations in Arcadia and City of Industry. We funded over 6,000 loans for loan amount over 2.7 billion in the last 2 years. Loan programs we offer. So I do have a question for you guys. Like normally, do you ask the client to get a pre-approval before you show houses? Yes, and most of your you're learning?
Yeah.
Okay, okay.
Especially with the new system coming in.
And for your clients, most of them are like full documentation clients, or they have or you work with people like they do like no income loans. Do you work with those people too?
Always a million, 2 million.
The bank statements. Based on the bank statement. Bank statement is a down payment source of fund. Okay. Yes. So do you guys work with people who cannot provide like the perfect tax return? Yes. Okay, great. Yeah, because we have a lot of loan programs to support agents, because a lot of people like they work with clients, they only have like full documentation loans, and however, we can do a lot more than that besides full documentation loan. For some people, some of the loans the big bank cannot fund, we can fund as well. So we offer a big variety of loan programs. For full documentation, we have a 5% down payment, and we can close in 11 calendar days.
Down payment?
Yes, if client qualifies. Normally for those clients, they have a lesser down payment. However, they have very good monthly income, because the less down payment you put in, the higher income you need to have to cover your cost, right? That makes sense?
And
Yes.
interest high too.
Depending on, yeah, it's not necessary.
Oh.
Yeah. So we have a 0 down payment for veterans. If you have any, if you have any veteran clients, we even funded like more than the purchase price. I have closed a few loans with veterans. Why we fund more than the purchase price? Because we can also fund closing cost into it. Because besides the purchase, they still need to put in closing, right? So Department of Veteran, they support putting the closing cost into their loan as well. So if you have any clients who are veterans, you could tell them like, you know, they might get qualified for 0% down payment. And for the non-QM, non-QM means people who do not have the perfect tax return. We do not check their tax return. So we have a few programs we offer. DSCR, who knows what DSCR stands for? Anybody? What is it?
That service.
Great answer. Yes. So yeah, so debt service coverage ratio is we use the rental income to qualify. We do not use tax return. But however, in our area, San Gabriel Valley, it is a little bit trickier to get DSCR loan to get approved at this point because the interest rate is high. During pandemic, we did a lot because when the interest rate is low, the payment is lower. So it's easier to get the rental income to cover all the expense. However, if your client is buying a little bit further than San Gabriel Valley, like some places, they do offer higher rental income, it might still be doable if they put down a lot of down payment. What is it?
Are you still looking for like 120%, 125%?
100 for the DSCR?
Yeah.
No, we actually have one, like as long as 100%.
Just one?
Yes.
Okay.
We also have 0.85 and we also have no ratio. However, of course, when it's lower ratio, like when it's no ratio, the interest rate is high. So we have other programs. Maybe the client will go with other program will have better interest rate for them. But if it's above one, like about 100, that's good. Yes.
Most of the banks will require 1.25.
Yeah, most of the bank, but we are not bank, we are lending company. So we have a lot more options to choose from.
Yeah.
So we also have 12 months bank statement. Do you guys have a lot of like business owner clients?
No.
Yes, right? Yeah, because we can, for 12 months business bank statement, we can do 10% down payment. Yeah, 10% down payment for business bank statement program, as long as they have good cash flow. What we need is that we will need to review their 12 months business bank statement, and our underwriter will review everything. We will determine their cash flow, and we will do a full pre-qualification for the clients. So for this kind of programs, we just need the business owners to provide 12 months business bank statement, and we'll based on their cash flow to issue their pre-approval. VOE is for who knows what does VOE means? Yeah, VOE.
Equity.
It's a verification of employment. So this so for this kind of program, is for people who they have maybe they have like cash. They have like it's for people they work at the restaurant. They have like tips income, cash income, like things like that. So for VOE program, we don't check all the non-QM. We do not check full tax return. We for VOE, we need their employer to verify they have been working for the last 2 years with the same employer and how much they're getting paid. Maybe they got like tips, you know, but the employer needs to verify that like in written. Yeah, so and we will call them to verify, oh, if this person is working here for the last 2 years, and the employer has to fill out a form. The interest rate is very good for a lot of our non-QM programs. For right now, for the non-QM program, the lowest we can do, the interest rate we can do is 6.25.
For how many years?
For 30 years, it's always 30 years. Yes, yes. When we talk about interest rate, yeah, there's 15 years, but there's very few buyers that are using 15 years. Yeah, so right now, who knows what is the interest rate for the full documentation right now? Yeah, residential for primary.
7.
Yeah, so it dropped. It was 7, like maybe a month ago. It started to drop like 2-3 weeks ago, and right now it's about around 6.375, sometimes 6.25. Yeah, so it's a very good news. Yes, and our non-QM is almost the same interest rate for as the full documentation right now. So I have covered the
What's the maximum price qualification for the house for them
what do you mean?
for this kind of a program?
Oh, it's the same as full documentation.
What is the price? Let's say 1 million or only 500,000?
You mean for the loan amount?
Yeah.
Loan amount is up to 3 million.
No.
Uh-huh.
For the employee, like in the restaurant employee.
It's a industry standard. So it's depending on the industry. Yeah. It needs to, it's like, well, every company is different. Yeah.
Appraisal, right? Appraisal value and then
Appraisal value?
loan value.
Loan value.
Yeah.
Yeah, the loan value is we can go up to 3 million. Yeah.
For the borrower. So
Yes.
say their
Yes, for the
income
borrower.
be 60,000 a month. Oh no, 6,000 a month. How much they qualified for the home loan?
Oh, that I need to, okay, so you are asking, that is not regarding to if they are VOE or if they are regular income. You are asking, so your question is if they are making 6,000 a month, how much loan they can get, right?
Correct.
Yeah, I need to calculate for you. I cannot just calculate in my head right now. Yes, but yeah, it depending on a lot of factors. Okay, it depending on if they have a debt, if they have car loan, if and how much the purchase price is. Yes, and also depending on the purchase price, because the purchase price will depending on will determine the property tax. So if the property tax is higher, they will get a lower loan amount. If the property tax is lower, then they will qualify. So it's a lot of factors. That's the pre-qualification we do. Yeah. So if you have a client, like you can like I can help you do the pre-qualification. Because even for people who earn 6,000, for 2 person, both of them earn the same income, it might be different how much they qualify for, depending on their debt. Yes, yeah. So that's not a straight answer. Yeah, but I'll help you if you have a specific buyer. Yes.
It also depends on the global PCR. You have other incomes, right? You have passive income, maybe you have rental income. Dividend.
Yeah. So
it doesn't.
Plus.
Then I don't need a loan, you have all that, I don't need a loan.
Okay.
So loan programs we offer continue. So I covered the full documentation, the non-QM, and we also offer bridge loan. And our bridge loan interest rate is very, very competitive. Our bridge loan interest starts at 6.99 for 1 month term. For 2 months term, it's 7.99. For 3 months term, it's 8.99. And for 12 months or 6 months, it's 9.99. So this program is really designed for 2 types of borrowers. For the first type of borrowers, is for people who wants to be very competitive when they putting down an offer. Because right now the inventory is still very low on the market. Do you guys agree? Yeah. So with cash offer, or with this kind of program, it's a lot more competitive because we can close in 1 week for this kind of loan. And if it's 1 month, 2 months, or 3 months, basically the buyer needs to refinance right away. So we will go over, we will talk about the situation with the buyer, and we will give them like a exiting plan. Let's say if one of your client got a house with bridge loan, and we will talk to them. Okay, if you got a 2 months term, like what kind of program we can offer you to refinance right away. So this is a very powerful tool. A lot of investors are using this. It's either for investors or it's for people who is flipping house. For people who's flipping house, they don't like really use their, not all of them, maybe some, but most of them, they don't use cash to buy all the houses because they need cash to run, right? They need cash to do the remodeling. So they come to lenders like us or other bridge loan lenders. They get it from the bridge loan. So they can get the offer, they can close in 1 week. And then they flip the house, they remodel it, and they sell it within a few months. So those kind of clients, if you work with that kind of like investors, this is a very good tool as well. So they buy it and they remodel it and they sell it within 12 months. The interest is 9.99, and all this kind of interest we talk about is interest only. So
they don't need to pay the principal.
they don't need to pay the principal. They're just paying like a balloon payment at the end of the
For
term.
bridge.
Yes, yes, only for the
So
bridge loan.
how about for the vacant land?
We don't do vacant land. Yeah, only for
Construction, bridge loan.
oh, I'll talk about that later. That is different. Yeah, construction is different. What we talking about right now are all like there is a parcel of land and there's a house on it. It cannot be vacant. Yeah, it has to be there's a house, and after they bought it, if they want to tear down, they want to rebuild, it's not our, we don't have any like we will control or anything, but when they buy it, it has to be secure with the real estate. Yes.
Tracy, can you hear me? Can I ask you a question?
Yes. Hi. Who's
Hi,
talking?
Tracy, this is Oscar Castellon. How are you today?
Hi, good. How are you?
Good. I have 3 questions. The first one is for the VA loans, since you're a direct lender, does the buyer need to pay for the appraisal, or is the appraisal included on the loan?
Yeah, they have to pay the appraisal. Appraisal is paid to third party. It's not done by us. Even us, we need to order the appraisal by a third party.
Okay.
Yes.
So you don't have your own appraisal. Okay, the second one is people that don't have a social security and they use I think it's called a TIN number.
I think.
I think yes. Do you do those loans for people that have that
Yes,
type?
we could. Yeah. So people who doesn't have a social security number for ITIN, they need to show like they are authorized to work. We need to see their EAD card.
And how much down payment do they need if they want to buy?
Depending on their income.
Okay.
Yeah.
My third question is do you do loans for foreign investors?
Yes, we do.
Okay.
Yeah.
How much
Yeah.
down do you need?
Invest, they got money.
What is it?
How much, like if they want to buy a business or a home, how much money, how much down payment do they need?
If you want to buy a business?
Yeah, business or properties.
Foreign investment.
Because I have this investor from the Philippines, and he wants to buy a business or buy like maybe like an apartment building. So like how much money will he need to buy a business, an apartment building?
Okay, so for foreigners, we need to first is that for the foreigners, if they are buying residential properties, their minimum is 30% down payment.
Oh, 30%.
Yes.
Okay.
And for business, it's harder because foreigners, they do not have file tax return here. And depending on if they own real estate in the United States already. And we do not do business loan for foreigners because SBA loan, we do have those kind of program, but SBA loan is a full documentation only. So foreigners, if they do not have any established business here, we cannot do. And we also for the business loan, we need to for the small business, SBA loan is a small business administrator. So that one is a FUDAC. We need to check 3 years business tax return. So that is not doable for foreigners.
Okay, thank you.
You're welcome. So let's keep going. So how can we close more deals together? We can do like a DU approval, underwriting approval, and we have a lot of competitive loan programs. So the benefit, like you working with me, is that your client doesn't have to go shop around. If they are not qualified for full documentation, then they need to go to like somebody else. Like we offer so many programs. So after the initial interview, I always have a phone interview with a client to know about their situation first. And I will communicate with you clearly if they are qualified to do loan with us or not. So it will save both of our time, your time, and also the client's time. And efficient closing, I work very proactively to get deals closed on time. And I always follow up with the clients. So I have a lot of referral business from my past clients or realtors, and some realtors, they refer their coworker to me. So once like we work with a deal and you know that I like to stay on top of things to get deal closed. Not just like I don't like people to keep following up with me. Oh, what's going on? Because I know how it is, like how painful it is. Like when the real estate agent finally get a deal, get the offer accepted, and then they don't know what's going on with the loans. Yeah.
Some
And
of our agents has a mortgage license. Do you give referral fees? No?
what kind of mortgage? Oh, so are they hang with a broker?
Well, they might have like, a mortgage, I mean, brokers license that specialize in mortgage.
Because for mortgage license, you have to hang with a mortgage company. Yeah. Are they sponsored with a mortgage company?
No.
Yeah, I don't think we can do that. Yeah. Yeah.
And then the referral will base per transaction, right?
No, I don't think we can do that. Yeah, because their mortgage license has to be sponsored with mortgage company. So just they having one license is not, yeah, we don't do that.
No, I mean that for the realtors, if they refer to you, and then they will get a referral fees, right?
Referral fees for real estate agent is not
No,
allowed.
no.
Kickback.
Yeah, yeah, right, Peter? Yeah, it's not allowed. Yeah.
State exam.
Well, if you have a listing, yeah, that's not allowed, right, Peter? Yeah, so if you have a listing, let's say if you have a listing for the buyers, transactions like, or, well, if you have a listing and there's a way like both of us can, like we can work together to get more deals. Like if you have a listing and you have a client who's coming to you directly without any agents, maybe we can do some lender credit, but the lender credit is only allowed to apply for the buyer's closing cost. Yeah. So that way, if you share with your buyer, because first, this is legal. The kickback is not legal. Yeah. So if you have a listing and you want to, let's say if you have a walk-in buyer or like you want to represent both, you could tell them, okay, if you do loans with my preferred lender, they can give you a lender credit towards their closing costs. No, close their closing costs only. Yes. So that will, like, I can work with you to pre-approve the clients and get the loan for the purchase side, and you can get a deal for both sides as well. And the buyer also get benefit from the lender credit close towards to the closing cost. Yeah.
Is there a limit of how much you cover for closing costs?
Oh, yes,
Uh-huh.
yes, there's a certain percentage.
Okay.
Yes, depending on the loan amount and stuff.
Okay.
Yes, yeah, so we cannot,
Cover the full.
of course, no, yeah, because no one will cover the full.
That comes out, so. I
Yeah.
just want to make clear.
Yeah, because yeah, it's like lenders need to make money too, right?
Yeah.
You cannot cover everything and yeah,
No,
yeah, yeah. So and also when I pre-approve the client, I have a system going out with emails for pre-approved clients. So every about 2 weeks, I have an email sending out for very useful information for pre-approved clients to prep them, like what do they need to prepare. So if you work with me, I can put your phone number and your email on the same co-marketing email. So it will go out to the client like with your name and your email address that like you stay in front of them as well after they got pre-approved. Because after they got pre-approved until their deal closing, a lot of things might happen, right? It's always good that we stay in front of the client and remind them and offer some useful information to them. So, market outlook. This is Fannie Mae's research from end of last year, and also they made some adjustment beginning of this year. So last year they were predicting the price growth to expect to be slow. However, they still predicting in 2025, the housing price will grow about 3.5%. Yeah, this is from Fannie Mae's research. Yeah. Supply shortage will continue to drive local pricing difference. I do think this makes sense because right now we do have inflations. So when everything, the prices go up, it's not making any sense that the real estate goes down. And yes, and a lot of the agents has been in the business for so long, right? Like Peter like has been in this business like for so many years, and I'm pretty sure like he sees when the real estate price sometimes it goes up, goes down, goes up and goes down, but in the long term it's always go up. If you see in a 10-year, yeah.
But 3.5% is a very conservative
Yeah.
figure.
Yeah.
It would be even more.
Yeah.
Yeah.
Look at the tariff.
Yes,
Oh,
yes,
everything
yes.
will go up.
Yes,
Right now, if you want to build a house, it takes you about $550
Peter.
per square foot.
yes, yes.
So how can-
500.
Peter, but
Yeah. Yeah.
yeah, but everybody's blaming the tariff. It's always been that way.
No, those are apartments.
So this is a very conservative number already. Yes, so economy growth, affordability, GDP growth forecast is 2.2 increase this year. The mortgage rate trend, so previously, Fannie Mae was predicting in 2025 the rate to be 6.2, and they adjusted in the beginning of the year. They adjusted higher to 6.5. However, right now the interest rate is good. Right now it's 6.25. So I already have clients. They are doing refinance with me. So if you have clients, like you could reach out to them, because always providing useful information is always good. So they can use us as a resource. So if you have clients like they purchased the home maybe last year, it's most likely their rate is higher than this. So we can possibly do like a refinance at no cost refinance for them. So I already have a few clients who's doing the refinance, no cost right now. Appraisal will be paid upfront by the client's credit card, and it will be covered at closing. Yeah, but they need to pay upfront.
Yeah.
Yes, and they will get a lender credit at closing. Yeah, because if they didn't close and they decide to cancel, and the lender paid for the appraisal already, then it's a loss to the lender. So it's always like closing, okay, like the lender credit at closing if they're doing a no cost refinance. So they are predicting next year the interest rate to be 6.3. So if the clients ask you, oh, what is the interest right now? Is it going to go down? Should I wait? Just tell them it's, you know, for this year and next year, most likely the rate gonna stay at about early lower 6. So right now is already very good. Yeah.
Excuse me, Tracy, this is Oscar again.
Hi, Oscar.
Hi, yes, I have another question on the VA loans. Can you do a buy down on a VA loan?
Yeah, interest rate buy down. We
Yes.
can do that for most of the full documentation loans.
Okay, and what's the interest rate for a VA loan now?
I have not checked today, but VA loan is normally about like a quarter or an eighth lower
Okay,
than the regular full documentation loan. VA loan always has the best interest.
yes, okay.
Yeah, yeah.
Thanks again.
Yeah. So so that's all the loan information programs and the interest rate I want to share. And I do want to share that right now it is this year. What do you guys think? What is the most challenging thing this year?
Challenging, the listing.
Listings to get the new listing?
Once you get a listing, you'll sell.
Yeah, yeah, yes.
But it's like a log jam because people don't want to give up our 3%. It's a log jam. I mean, he's right.
Mhm.
But
Yeah.
Over 60% of their mortgages are under 3%. So how do you expect them to move?
yeah.
Yeah.
Once you sell the home, you can.
Exactly. Yeah, that's what I mean. It's
Well, less than,
Yeah.
The interest rate right now.
Yeah.
Even lower interest at 6.5,
Yeah, yeah, that's
Why
true.
should they move?
Yeah, yeah, it is. Yeah, that's a problem. Yes.
And it only
Yes.
refer to the residential, right?
Yeah.
Commercial would be higher.
Commercial, yeah, because commercial, yeah. So,
That's the point.
yeah, another
You
challenging.
do commercial.
We do, but not that much. So if you have a specific scenario, you can reach out to me. Yes, because it's all case by case for commercial. Yes, it's a lot more complicated.
Right.
Yes, but we do. Yes. So when you have a specific case, we can like get to know more. Yeah. So another challenging thing is that the insurance, the housing insurance. So this year, if your client, even if you have a listing, or if you have offer get accepted, the first thing is always check if the insurance, the company will, do a new policy. They will issue a new policy. Like this morning, I have a purchase deal, and we were in escrow for a while. It's a new development. They are still under construction. So the insurance the client selected came back to us saying that they are not issue new policy. So the client is shopping in a lot of insurance, they don't issue new policy in Los Angeles County. Yes, and after the fire, it gets more, it gets more complicated. It's even harder. So for the loan part, lending company and banks are okay because as long as the property is okay, as long as the client's qualification is fine. However, they do have to have homeowner insurance if they have a mortgage, for sure. So they really need to shop for insurance like right away. That is one of the most challenging part for this year as well. Yeah. So if you guys have any,
About HELOCs.
oh, we don't do HELOC.
Not to HELOC.
We don't do HELOC. Yeah.
Oh.
Yeah, we only do refinance cash out.
How about line of credit?
Line of credit is HELOC. That's a good try. Asking the same thing. Yeah, HELOC. Yeah, sorry. Let me. Yeah, because HELOC is stand for home equity line of credit. Yeah, so that's a good try, but it's the same thing. Yeah, yeah. We don't do that. We only do refinance cash out. We will, because HELOC is like a credit card. It's like a credit card. It's like we give you a line of credit, and then you could use later on. And later on, when it, like we don't know when you're gonna draw. It's very like only big banks do that. Like lending company, most lending companies don't do that. So we only give you a lump sum. Let's say if you have a 1 million loan and you got a 500,000 cash out, we just give that cash out to you right away.
So what is the interest rate for refinance?
Refinance, if it's rate and term, it's almost the same as a purchase.
Oh,
As purchase, it's the same as purchase. If it's a cash out, there's gonna be about like a quarter higher.
quarter higher
And
than
your loan fees,
6.3.
Yes.
Yeah, and it's depending on the interest. When we talk about interest, it's also just like a benchmark interest. It's not the same with everybody because interest rate is depending on 4 factors. First is a LTV, loan to value ratio. Second is a second is a loan amount. Third is a FICO score, and the fourth is a property type. So for a single house, attached condo, detached condo, people who has 800 credit score and 680, the interest rate all gonna be different.
Yeah.
Yeah. So yeah. So refinance, if you are doing refinance rate and term means that you do not take any cash out. You stay with the same loan amount. The interest rate is the same as purchase. But if you are taking out cash, let's say originally your loan amount is 500,000, and now you want to take 100,000 out of it, make the loan amount 600,000. It's a little bit higher than the purchase, but I cannot tell you exactly how much higher because it depending on all the different factors. But it will be a little bit higher, slightly higher.
Okay, one more question. Sorry.
Mhm.
Let's say they have a house clear title.
Have a what?
Clear title.
Okay, okay. Mm-hmm.
And then you want to refinance.
Yeah.
How much the percentage you can take out, and then is the money only need to be reinvested in the house or can be
No,
to another business or whatever?
So the most we can do is 70% of the value. So if it's 1 million, we can get 700,000 cash at closing,
Mhm.
and they can do whatever they want.
Whatever.
Yeah. Mhm.
But going back to the 700,000,
Yeah.
but also they gotta qualify for that.
Of course.
Oh, yeah.
Yeah.
Listen, he said
No
no.
need, even though you have a bankrupt, whatever, 70% for the bank is good.
No. We still need to check the
You still
repayment
qualify,
ability.
No, then you have to old fashioned, honestly. A lot of other finance company, whatever you.
Oh,
have,
they'll take, you say,
Yeah,
they want the
yeah,
house,
because
you
you
say,
have fully-
yeah.
Fully paid already.
No, this is talking about non-QM.
oh,
Non-QM, we still have some sort of qualification. Yeah, so depending on the client's situation. But the highest we can go is 700,000. Yeah.
Yeah.
Mhm.
so and then how about the loan fees you charge?
Yeah.
The loan fees, okay, for full documentation, we normally charge it depending on which program. Normally it's there's an underwriting fee for 1,295 plus
Left?
no, plus 800
Oh.
processing fee. Yes, that's for the full documentation. For the non-QM, we charge 1 point on top of that. 1 point means 1% of the loan amount.
It's a lot.
Yeah, for non-QM, for non-QM, it's
Usually
So,
one to
the
five
loan
to
amount.
10 times.
what?
Can you observe to the loan amount?
The loan amount?
Yeah.
Add it in.
Only for refinance, maybe.
Oh,
Yes, for purchase, no.
Appraisal, everything in the loan amount.
Appraisal is always paid by buyer's credit card. Yes. Mhm.
Yeah.
Mhm. Bridge loan,
Yeah.
bridge loan is 2 points.
Computer.
Well, we're putting
Yeah.
more here, so,
Yeah.
well, they'll be.
Now, the rate,
Let me,
the
you
interest rate,
don't know your way around, do you?
Yeah.
is different for owner occupied and
Okay, well, they'll be.
non-owner.
Yeah.
Computer rooms.
Okay.
And then
Thank you, Tracy.
Oh, you're
See you
welcome.
later.
Yeah, so for non-owner occupied, depending, again, it's also depending on the program, but normally for non-owner occupied, it's about 0.25 to 0.375 higher than primary. Yeah. Yeah.
But what if we say that I'm going to owner occupied, but later on, turns out after a couple of months after process go, we decided to rent it out.
3 years, right?
1 year normally, yes.
Okay, but who's gonna tell? How are you
If
gonna monitor?
it's randomly monitored.
Like the IRS.
Yes, it's randomly monitored. So yeah, if they don't, cause like
Nobody turn your hand, you know?
Yeah, it's randomly. Well, it's based on yeah.
Don't get your neighbor mad.
Yeah. So first, this
It's the
is
truth, right?
first this is based on
But the neighbor doesn't know whether you qualify for.
No,
that
your
normal
neighbor will
occupied.
find, your neighbor finds a way.
well, first this is based on owner system. And the second, it's also when people are applying for the mortgage, the underwriter will see if it makes sense or not. For example, if Peter owns like a 5 million home, and then you are buying a 500,000, and you are saying, "Oh, this is my primary," then the underwriter might say, "Oh, we don't think this is the prime. Why are you? You know, it needs to make sense." Yeah, but if you
What about second home?
second home, there is a mileage. If I need to check the exact mileage. I think it's 50 miles. The
50
second home, yeah, unless you have a specific reason. So for example, I have a buyer. He has a first home, in Arcadia. We did help him bought a second home in Monrovia with a primary rate. But the reason being is that he lives with his parents, and his parents were helping taking care of the grandchildren as well. So we need to have a explanation letter, like why do they need a second home? Like sorry, I mix it up. So when I say in the 50 miles, it's a vacation home.
Yeah.
Vacation home has to be a certain mile with a primary, but second home, as long as they have a legit reason, we need to have an explanation letter when we submit the loan. So when the underwriter sees it, they will, oh, this makes sense, then it will get approved.
The most logic is job related, I would think.
Well, there's
I
a
would think.
different, yeah, that's one of the, yeah. So there's a different, like, different reasons, because people have different scenarios. So if it makes sense, it's okay, it's acceptable, yeah.
Second home cannot be rent out, right?
Yeah, like,
You can only leave it vacant or whatever, or you occupy.
yeah, technically, when you are applying a second home, you're supposed to live there as your second resident. It's not an investment property. Yeah.
Thank you, Tracy.
Yeah, thank you. So if you have any like
Tracy, back to my question.
Mm-hmm.
And I think Peter might be able to answer. Okay, let's say your buyer, I think you said that they're having a problem getting insurance, which I know, I understand that. California Fair Plan.
Yeah, they could do that.
Okay, can they get involved in escrow? That was my question.
Okay, what do you mean by involving?
Okay, let's say I have a buyer and I get an offer accepted. And we know the insurance, like in your case, can we go directly to California?
Yeah, you can, no?
During escrow? I didn't know that.
You can always go to California Fair.
I didn't know
But
that.
the thing is that the Fair Plan.
They're
they
out of
don't
money,
cover-
yeah,
they don't
they're
cover the
out.
whole thing,
Yeah.
you still have to purchase the DIC, deficit in coverage.
Yes.
Yeah,
Yeah.
Yeah,
So-
right, but if you have to, yeah. if you
So
have
what,
to-
yeah, what I wanna add to, I could add something to that, cause, first, when the client, they go to an insurance company, the
Exactly.
insurance company will tell them, okay, this part, we don't cover. And then the insurance company, they will
We-
contact, they will contact California Fair Plan on the behalf of buyer. So it will be two parts. For the insurance, it will be two parts. So we still contact the insurance company and they will give us two parts. One part is covered by California Fair Plan.
Mhm.
Another part is covered by the insurance company. So,
DIC
yeah.
covered,
Mm-hmm,
10% coverage.
yeah.
That's exactly right.
Thank
Yeah.
you.
Yeah, so, but the problem with the California Fair Plan is that we cannot, we cannot predict their turnaround time. It's sometimes the insurance company sending, we got it back the next week. Sometimes we have to wait like 3 months. I mean, not 3 months, 3 weeks.
Yeah.
Yeah, so that might affect the closing time, the escrow closing time because
Like
of
you
the
say, do it
insurance.
right away immediately.
Yeah.
That's true. Yeah. So here's my information, my phone number. Yeah, please text me your phone number if I don't have your phone number yet. And for some of you, if you use WeChat, I know not all of them use, not all of you use it. Yeah, if you use WeChat, you can scan this QR code. Yes, and that's it. Yeah, so
Thank you.
yeah, thank you. Thank you.
Thank you so much.
Thank you, Peter.
Yeah. Thank you.
Thank you, thank you.
Here's my card. You answer.
Thank you.
Thank you all for attending today's seminar on lending. We hope you got some valuable information and we'll see you on Friday for the training. Thank you very much. Have a good rest of the day.
Thank you, Michelle. Thank